Hello traders, today is May 6, 2020. Welcome to my trading recap video. This is just all trading on order flow using the DOM or depth of market or order books, whatever you want to call them, using futures products. From left to right really quickly, there's 5 products on the screen right now. From left to right, we have the Ultra Bond all the way on the left, symbol UB. Second to the left is ZB, which is the 30-year. In the middle is the ZF, which is the 5-year Treasury note. The ZN is second to the right, and that's the 10-year Treasury note. And then all the way on the right is the ES, which is the E-mini S&P 500. So when I say ES, I'm referring to the E-mini. ZN is the 10-year, so on and so forth. This is the Jigsaw Day Trader platform. It's very simple to use, but I don't really teach you how to use it. What I do is just sort of show you my trades, and hopefully you're comparing them to what you're doing, and you can tell me what I'm doing wrong, or maybe you might learn something from what I'm doing. I learned from the best, which is No BS Day Trading. Look it up, go to their website. It's invaluable. It's the best. I don't recommend paying any money for training or anything like that, but until I found this guy's course and his live trading, John Grady, he's a really good dude, and you learn a lot from buying his course. I would highly recommend it. It's definitely worth the money. So first trade was at 6, just before cash open. It's going to be in the 30-year, which is the product is second to the left. Basically, we just had kind of a rush to the bottom. Previous low here, I think, was 21, 22. 22 was the previous low. So we kind of have a rush into the lows. This is one of my favorite setups in the 30-year, is where it will actually push down through by however many ticks. Sometimes it's 5 ticks, sometimes it's 10 ticks, whatever it is, and it'll push through and start printing some volume, and then it'll just basically trade back up into the previous range. So that's kind of what I was looking at for this trade. It looked like it was starting to print a little bit of volume at 19, and I thought I had missed it. There was a huge drop during the overnight. As soon as the pit opened, which is at 5:20 a.m. my time, all these products basically sold straight down through their overnight lows. So it just blew all the way down, and when that happens, I mentioned this in a couple of my previous videos, but when that happens, you often see continuation. Very, very common. So this looks like that continuation trade. And it's basically the second wave of this push down, which isn't normally as big as the first one. But this one was a lot bigger than I thought. You could see that I'm starting to kind of be a little bit loose with my risk, but I figure on this that I should be trading a 2 lot at this point, so I can just add to it as long as it doesn't go too far. And then after that, if it continues to break down, I got to cover the trade. Kind of still playing it. I'm playing it as if I don't have a position yet. So I'm letting the kind of the volume build up a little bit. I'm waiting for it to pause. Which it does there. So I go ahead and double down at 17. Not the smartest thing in the world, but it was warranted, I think, on this one. If this was later in the day and we had this kind of breakdown like this, I would not be going anywhere near this, because that's when you get one of those straight markets that'll just start to liquidate or just get in full rally mode, and it'll ditch you, and you'll never be heard from again. So early in the day, I think it's okay. It's not, obviously it's not wise, but it's okay to do to be a little bit looser with the risk and kind of add to a trade that goes against you a little bit. So that said, it does start to go in my favor a little bit. Obviously, I'm a little wary because we did have 2 pushes down. I'm not sure if this is done yet. I thought it was done once, so I got into it, obviously. So this is my second shot at it. If it doesn't, I'm right there. I'm ready to scratch this thing if it really starts to come back down, because that's, obviously I got to start covering it at 15, 14 down there. And I got to make sure that any loss I take, that I can make it up within one more trade. So if my expectancy is a 3 tick or 4 tick, whatever my expectancy is, I got to be able to make up that loss in the next trade. That's kind of my rule, as a general rule. So kind of out there on this one a little bit, and I think that's why when it starts to go in my favor, I just sort of cover it fairly quickly. The other thing to consider that I had to consider was that cash open was happening, and all bets are off when cash open comes along, because that can drive all these markets in different directions. And so I'd rather just scratch the trade, take a tick out, take 2 ticks out, whatever it is, prior to cash open, just to be safe. And I can always get into it if it drops back into 17, 16. I can always buy it up again if I really want to. So that's kind of the situation here. This actually does trade back up, trade all the way up into my target. I think it might drop down into 2019 or that area again, and then finally go up. But if I would have just kind of let this ride, I definitely could have had 28, where my target is now. But like I said, I'm a little conservative when cash open comes. Try to stay out of that that volatile environment. So that's when I kind of just figure I could just cover it here. And that's kind of what happens. So trade number 2 is in the 10-year. And basically we're just trading off this profile step. Just sort of see the offers stacking up. I see the Ultra Bond and the 30-year start to trade back down. ES is kind of rallying. It started to take a dump, and it just started to kind of print some volume down there, and kind of started moving higher. So I figured that was a good time to jump in, provided the offers over here are real, and they can kind of put a roadblock up. It should be pretty easy to push this thing down into this little range back towards the point of control, and back down into the lows. So we got to keep in mind it's still early in the day, and we still want to be on the sell side unless you're trying to do a fade trade, because all the pressure's been to the sell side. We had that big push down. We had that second push into the lows. So you got to roll with that until you see otherwise. So if you do have an opportunity, like for me, I have to sell down towards the point of control and buy up towards the point of control. So luckily this is above the point of control. So I have a good opportunity to sell this down. And I'll fast forward to this trade, but it goes in my favor. It goes in my favor, but the 5-year is basically not flinching at all. The 5-year is in full rally mode. It won't sell down at all. And there's a point where the Ultra Bond and the 30-year had got sold like basically all the way down, and they'd start coming back all the way up to the yellow line, like almost back all the way up to it. And the 5-year was still above the yellow line. I just could not believe this. And the bids started pumping up, and I just said, screw it. I said, I'm going to scratch this thing and kind of reevaluate, see what's going on. So that's when I decided to cover this trade. By the way, this is going to be a really quick video because I'm super lazy today, and I took an edible earlier, and when that thing starts kicking in, if I start talking gibberish, I'm just going to I'm just going to cancel this sucker. But anyway, so this, unfortunately, this ends up trading up into 16.5, 16, and actually sells all the way down to the lows. And this happens really quickly. I'll fast forward to that part because that's when I try to buy up the bottom. So I scratched that trade. So this next trade is in the 10-year. And basically, I just kind of bought the bottom. I figured that the 5-year's way off the bottom. So the 10-year, even if it does go against me a tick or two, it's not going to be that big a deal because it's not going to go anywhere with the 5-year just so far off the low. And that's kind of my mentality in this whole thing. Even though I know this is kind of I treat it as kind of a fade trade because all the pressure's on the sell side. And I'm still kind of stinging about missing the trade, but I missed this whole move down. I don't know what I was doing. I think I was brushing my teeth or taking a dump or something, but I missed that entire sell side down. So when I got back over here, got back to my desk, and this thing was at the lows, I just thought, wow. Number one, that sucks that I missed the trade down. And then number two, it's a great opportunity to hopefully buy this thing back up because we're at that time of day. It's a little early, though. It's still 7:20. But we are definitely at that time of day when this thing will start to kind of plateau, go sideways, and then reverse back in the other direction. So right about at this point, I'm thinking, holy shit, I am screwed. And getting ready to kind of cover this thing, but I'm looking at the 5-year and it's still like, so I'm thinking the 10-year can't go that much farther. It just can't. Like the 5-year is going to hold it up. But I'm a little shocked. A little shocked at the aggression. Even though I shouldn't have been. I should have definitely been on. I should have looked for this to go sideways a little bit more before I jumped into it. I should have been on the sell side. Should have been on the sell side all morning. But for some reason, I thought it was just okay to kind of hang an order out there. I was in this trade for about 10 minutes, so I'll go ahead and fast forward. It's one of those things where I'm just kind of thinking to myself, I don't know what happened here. Like, how did I get in this position? I'm giving it an opportunity to recover. And again, like the 5-year is still like above the point of control. It's crazy. I know I keep saying that, but so this actually, what happens here is this trades all the way back up to 15, obviously. Or not obviously, but you'll see. And so it starts to struggle here at 10, half, 11, and that was the previous low, basically. So I'm thinking if this thing is going lower, if they are going to push this thing lower, it's going to happen right here. This is where the resistance is. This is where they're going to, start putting up a fight again. So if I have to cover it here, I'll go ahead and cover it. It's only 2 ticks, not a big deal. So that's what ends up happening. And I try to actually cancel this order because I could see that they're going to push this thing up again, and I don't get it. And if I would have caught it, see right there, I tried to cancel it because I knew I could tell that they were going to push this thing back up again. And sure as shit, within a couple minutes, we're trading back up, above 11.5. It is what it is. I mean, you got to watch your risk. That's the main thing here. And I had already let this thing down, drop way too far in, and that 2-tick limit is a good spot to take it off. I was wrong on the trade, so I shouldn't be making money on it. Taking that off at 2 ticks, I got no problem doing that at all. That was a bit of a mistake. I just jumped into that thing way too early. There wasn't any sort of an indication, enough of an indication there. And then I should have been over here looking at a trade in the 30-year. See, we're already up to 11.5 in the 10-year, and I could see buyers are starting to, we've done a bunch of back and forth here, down here in the 30-year, between 2 and 6, and I could see this thing was starting to break out. So basically, it's just like a momentum thing, just trying to catch it as it starts to go. Give it a little bit of time. Hopefully the ES can fall in for me. And worst case is, 3-tick loss. Ideally, I'd like to have this down at 4 and 3 so that I know I'm definitely wrong at 0 or 31 in the 30-year, down below the profile. But you can see the kind of the buying pressure taking this thing back up. So I just sort of jumped in and kind of hung on tight. And this does a bit of a back and forth here. I don't sit in this trade for a long time, but it does do kind of some up and down up in this region that we're in now. But it does finally trade all the way back up. Definitely would have hit my target. Would have taken a little bit of while, and it would have taken, I would have had to sit through it going back and forth right at my entry, which I'm not really keen on doing in the 30-year. So I just kind of followed up with my stop loss. Again, this is just a momentum thing. And these products do this all the time. They'll do like a short squeeze, or in this case, a long squeeze. And then they just push back in the other direction as people cover their trades. And the one thing that I probably should have, if I could do something different on this trade, was just go ahead and cover it here at 12 or 11. And the reason is this was the previous low. It was immediately rejected at the previous resistance. So now I just got stopped out. Three ticks. So a little momentum trade. The next trade is not till after 8 o'clock. Basically what had happened is this trade's going to be in the 30-year, but you have the 5-year, you have the 10-year basically trading up at this profile step, or at least near it, and the 30-year had basically sat and traded back and forth between 17 and 19 for quite some time. So it's basically just kind of gambling, I guess, in a sense that when this does break, it's going to break to the downside. So ideally, I would like to get in at 19 or 18. Because that was kind of the upper end of this little 3-tick range that it was trading in. But it looked like it was going to break. Of course, it doesn't. ES is pushing up into the highs, or pushing higher, I should say, which can force this, to trade down. So I was in this trade for about 8 minutes, I think. And my big mistake is right now I have a volume stop and I have it at 20, right? It's at 100. Should have left that right there. What my concern was is if this thing breaks higher, that a volume stop you definitely get you can get slipped with volume stops. Happens all the time. So my concern was getting slipped to 21 or even 22. So I took off the volume stop, and I'll fast forward through this. It basically just trades sideways here at 1918. And basically I get stopped out, and 13 orders trade up into 20. And then it basically just drops right back down. So you had 220 orders up there. My volume stop would have saved me from that happening. So of course it ends up, sometime later, it ends up selling down. And you know, in the future, I think I was just sort of bored, and I wanted to kind of get in. I saw that was developing, so I jumped in on it. And in the future, you just got to wait for it to break, and once it breaks, just jump into it and take the momentum. So that's lesson learned on that one. Okay, so this is when everything really starts to slow down a ton, getting into the lunch hour. But basically, I just sell. It's in the 10-year, and I sell this profile step here at 15.5 again. Pretty much a no-brainer. You see profile steps like this, you kind of have to take a shot at them. Again, you could wait for it to break one way or the other and jump in on it. But we basically held this level for pretty much all day. So it just kind of goes back and forth. This is the trade that really pissed me off today. And I'll tell you why. Because I'm been wanting to work on staying in trades. Been wanting to be more patient and just use kind of like once it starts going in my direction, just start walking down my stop loss, you know. And this goes like 4 ticks in my favor. And I think I like walked away. I went and did something. And I came back, and I think it was starting to work up against me already. But I easily could have had 4 ticks out of this. Very, very easily. But I think I was just trying to walk it down. I was trying to be more patient, trying to maximize profits, I guess. Let winners ride. But yeah, I'll fast forward through a lot of this, but you can see pushes down 2 times. I think I got it, you know, and it comes right back, just snaps right back up on me. I did not see that coming. And basically, the 5-year is just holding up all these trades today. And I know I keep saying that, but it basically traded in like a little 10-tick range the entire freaking day. But yeah, so I missed out on a huge opportunity here. I end up getting stopped out at 1 tick. When I could have easily had 2, if not 3. So that was a little disappointing. But what are you going to do? I figured it had already sold down once. Maybe it was going to sell down again. That would have been a pretty handsome little profit if I could have taken this down into 10 or 10.5, even 11. One more trade. Okay, so there's another trade in the 30-year. Basically kind of trading this profile step that has started to develop here at 9, 10. We just kind of, they'd come down here and just sort of sat here and lingered and kind of done the back and forth thing once again. So I just took a shot that basically it was just going to trade back up to the point of control. And this was the longest freaking trade. I sat in this thing for over 45 minutes, and I'll fast forward through all of it. This is the lunchtime hour in treasuries and bonds. They just go nowhere. And when they finally do break, they pop. This is another one where basically 15.14 was where it had sold down previously. I was hoping this thing would push up through back towards the point of control, but it doesn't. It snaps right back down to the same place it did last time. So on a 5-tick move, I get 3 out of the 5. So I gotta be able to capture that, increase that capture rate there. That's going to be key to making more money. I got to up my lot size, and I got to start taking trades off faster. Oh, actually, yeah, right here. That was an accidental trade. I tried to get out of this one, and ended up getting short because I got stopped. Forgot about this one. So I just put a scratch order in because this is a complete accident. I think I could have made a couple ticks out of this, but who knows? It's when you get into a trade accidentally, you just want to get out of it. At least I do. So yeah, that was it for today, and pretty much a slow day. Got really slow towards the end. Fairly productive, I think. 2, 5, 4, 5, 6. 6 ticks. Not bad. Not great, but not bad. Anyway, if anybody has any questions, comments, leave them down below or send me an email. I always love to talk shop. Otherwise, I'll see you tomorrow.